The Bank of England decides on interest rates on Thursday, the 14th of December. Joining us now for an assessment of what could come out of that meeting is Paul Hollingsworth from Capital Economics. Paul, at the last meeting, the Super Thursday meeting, we saw an interest rate rise of 25 basis points on a 7-2 vote. What are we expecting on Thursday, the 14th?
I think this is going to be a bit of a non-event, really. It's not been that long since the inflation report. They haven't got much extra news on what's happened to the economy. And I think the MPC are really going to be in a kind of wait-and-see mode now. They've pressed ahead with that first hike. The market seemed to react to it fairly well. It's probably still early to see what the impact on the economy has been. We're going to have to wait for a couple of months to get that data flow for the post-hike period. But I think, given that it was a fairly small move and it had been well signalled, we're not going to see a huge impact. Nonetheless, I think the MPC are going to wait for some time before wanting to hike rates again.
This, of course, doesn't mean to say that some of those 7 that voted for an interest rate rise last time around won't do the same again this time. One of those was Ian McCafferty. Now, he is a long-term hawk on the committee, isn't he? He is involved in this next meeting on the 13th and 14th, the meeting that looks at this interest rate picture. Do you see any of those 7 voting again to raise interest rates?
I think it's possible. I don't think we'll see too many people voting to hike rates again. I mean, certainly what we've seen in the minutes of recent meetings is this idea that, not necessarily a one and done, but at least just a reversal of August's rate cut to begin with, and then see what the impact on the economy is before actually pressing ahead with further interest rate increases. So I wouldn't rule out perhaps Ian McCafferty voting to raise rates, but I don't think we'll see calls from many others to also hike again.
As you said, there's a little bit of time to go before we get an effect on this rate rise we've seen. Just remind us what the reasons were as to why we saw an interest rate rise, and do you see those reasons continuing into 2018?
I think what we're seeing on the MPC at the moment, there's clearly a balance of demand and supply. So they think that Brexit is weighing on the economy. That's going to damage the UK's long-run potential growth rate. So actually, you don't need to see that strong rates of demand in order to warrant pressing ahead and raising interest rates. Now, at the moment, clearly, there's not that much wage growth in the economy. Price pressures, domestic price pressures, that is, are still fairly subdued, even though we've got headline inflation above target. But I think the MPC, at least in their forecasts, they're expecting a gradual increase in these domestic inflationary pressures over the next year or so. So they're confident enough to at least just withdraw a little bit of that stimulus that they injected back in August. And of course, remember, it wasn't just the rate cut, but we also had the increase in asset purchases as well. So this is only part of that stimulus. It's really going to be about waiting for those inflationary pressures to actually show themselves in the data before they start to press ahead with the actual tightening cycle rather than just that kind of initial rate hike.
OK, all right, Paul, thanks indeed for joining us. Paul Hollingsworth is from Capital Economics. Looking ahead to Thursday the 14th of December at high noon, we will be live trading that event here on IGTV.